Okay, I am live with Cherry Chan, CPA, Chartered Professional Accountant, who specializes with real estate investors and small business owners, correct?
Yes.
Okay, so this video is going to be bookkeeping 101 for real estate investors particularly. So let's just start off with the basics. What is bookkeeping and why do real estate investors need to do it in the first place?
Well, in Canada, the reality is that everyone needs to file taxes. And you are supposed to report all the income that you receive worldwide income, so not just in Canada. So to do the bookkeeping, it just means that you are organizing your numbers in an organized fashion so that you would be able to present the information to CRA in an organized fashion, so then you don't need to rush around at tax time.
Okay, and so what is the general deductibility rule, if there is one, for real estate investors?
So according to the Income Tax Act, all you need to do is, you are eligible to deduct anything within reasons to earn income, business income or property income. So when it comes down to real estate rentals, it would be rental income. So we are eligible to deduct any expenses that you incur for the purpose of earning the rental income.
What about property appreciation, or do they just care about the income?
Income is one side. Property appreciation is another different tax applicable to property appreciation.
Okay, so we're just looking at the income and expenses here.
Yep.
Do you need an invoice to basically prove every single expense? If you don't have an invoice, can you still claim it?
So in Canada, with CRA, you always need something to support it. So if you pay your expenses through your Visa card, your bank card, the statement itself, a lot of our clients would come to us and give us the statements to do the bookkeeping. It's a great resources to summarize all your expenses. But unfortunately, in the eyes of CRA, it's not sufficient for them, for you to, for yourself to prove the expense. They actually need to see the actual receipts.
Is that just because it can be easily frauded? You can just Photoshop a statement? Like why? It seems as legitimate as an invoice to me.
Well, the reality is that they won't be able to see the breakdown. They don't know, like, if you see the Visa statement, it says Home Depot, they don't know what you're buying. Yeah. You said that you're doing a kitchen bathroom renovation for your rental property, but it could actually be a desk for your home. So that's the reason why they need to see the actual invoice, to see the itemized stuff on it that you're claiming against your rental property.
So it has to be the itemized receipt. It can't just be like the credit card Visa little receipt that comes out of the machine, right?
No, it cannot be your bank statement, cannot be Visa statement, cannot be your line of credit statement. It has to be the actual original receipt. Virtual copy counts. So if you take a picture of it, it still counts.
Okay, digital versions work.
Yeah.
Is there ever any issue with submitting a digital version?
I think with the COVID, the last couple of years, everything that we submitted through our practice has always been electronic copy. Mm-hmm. So we haven't seen any issue at all. Technically, CRA does require our documentation, our receipt to be stored in Canada. I know it's a funny thing, but a lot of the online storage are actually having their server outside of Canada, and that technically isn't in compliance.
How would they know that? Like, what are you submitting to them? Are you submitting the actual receipts along with every tax return?
No. You don't have to. You just need to submit the information. We are operating in an honest system. Yeah. So they would have their own trigger. CRA would have their own trigger to select the high risk audit that they could do the audit on. Okay,
so because it's a self-assessment system, only if they see something like an issue or a potential issue, will they flag you and come after you, and then you have to provide that documentation.
Yes, exactly.
Okay. Can you, as an investor, just gather up all your receipts for the year and then just give it to your accountant?
Absolutely. There are multiple different ways for you to do your bookkeeping. You can have your accountant doing it for you, tally it all up. You can do it by yourself, for yourself. If you are an investor with multiple properties, you may want to do a little bit of work yourself, organizing, store it at least by property, and it would make your accountant's life a lot easier, or your bookkeeper's life a lot easier.
So that's up to an agreement that you make with your accountant if they're going to do the bookkeeping for you?
Yeah.
Is that typically an additional cost?
Oh, for sure, 100%. The more your accountant,
just hand them a shoebox of receipts, like.
We do have some of those clients, and we need to charge them the bookkeeping costs as well as the file preparation costs for the tax return. So like bear in mind that the more that you do, the less you would be charged, but the less you do, the more you get charged.
Okay. The first thing I think of is, hey, that's a pretty easy solution. Like I don't have to do the bookkeeping myself. I can just pay someone else for it that easily. It's like a one-stop shop.
Yeah, absolutely. The reality though, like I just had a conversation with one of my clients yesterday or a couple of days ago. We are going through her own sets of books, and she was saying that she knew every single item when she was the one doing the bookkeeping, and it gives her a sense of ease in terms of like where things go, where expenses go, like how things are made up of. And versus right now, she has a bookkeeper that she works with, and she has no idea whether the bookkeeper is doing a good job or not. So like, I mean, that's partially a trade-off.
Yeah. So it's just for her own tracking. She likes knowing exactly what's going on. Okay. And does your accountant or yourself need to actually see the breakdown of every expense you're claiming? Like every individual expense listed and then also categorized? Or do you just kind of need to know the overall dollar amount that a real estate investor is expensing at the end of tax season?
Typically the accountant who does your tax returns do not really need to see the breakdown unless there is a red flag. And I typically get a summary of income and expenses, and sometimes my clients provide a bookkeeping record. So I get to see the detailed breakdown of the expenses, and then I get to actually ensure and do a scanning of all the expenses to make sure that they are all legitimate. So they may say that, hey, I have this LCBO $500 LCBO bill, and I'm deducting against the tenant, and it's being booked into, I don't know, being categorized as office expense. I would not have known unless I get the breakdown. So by providing those information to your accountant, you don't have to, but by providing that information to your accountant, you're actually giving them the access to the information. They can make sure that it's being deducted accordingly.
Is that something you would typically do as an accountant? You would review line by line?
I wouldn't say line by line, but we would spot patterns that, like, for example, repairs and maintenance is one of the things that are like huge. We would ask clients, like, if the repairs expense is extremely high compared to last year, we would ask, like, what's going on? Or if mortgage interest has gone down substantially, are you missing some sort of an expense? Maybe we are not accounting first half of the mortgage before refinancing, and you're only providing me mortgage statement for the second half of the year. So
now,
things like that.
I'm assuming this is something you do to protect your clients,
Yep.
so you don't get them into deep waters. Is this something you also have to do for yourself to protect your accounting firm? Like if someone were to claim all this stuff?
Well, there's always a trade-off. Sometimes there is. I do that for my clients. I do that. As an accounting firm, we do that because we want to make sure that our clients know, hey, if you ever get audited, it's a pain.
Yeah.
It's very painful. It's not like we have to charge a client to organize their stuff to submit it on behalf of them. Not that we want to, but CRA is asking it for in a certain format that they can audit easily. And there are, believe it or not, there are times that the clients are not, not as organized or missing receipts. Or they sometimes...
I definitely believe it. That's more believable than that they would be all completely put together.
And I've received summary of income and expenses in round number. All of them are in round number. So it could be $100, $2,000 of property tax, and a mortgage is $3,500. And then like immediately, hey, like you make this thing up. Roughly is this much, but
Wow. So people will give you that rough of an estimate sometimes.
Yes. So then I have to go back to the client and I said, like, this is not acceptable. We have to have the actual documents or actual number.
Yeah, got it. So what is the easiest way for real estate investors to keep their books and track their expenses through the year? Is there something you typically recommend most investors you work with do?
So depending on the scale of the property and the number of properties that you have, if you are just starting out, I would recommend the clients to at least use the envelope system, create a buy a big folder and store all your receipts related to that particular property for that particular year. Then that's all you need. And at the end of the year, you can tally it all all out. I would also recommend the client to have a separate bank account, especially when you're first starting out. So then you know the money going in and the money coming out. The money going in are only the money that's the rental income that's related to the property. And the money coming out is all the expenses that you incur for running the operation. So it's dedicated bank account just for that particular property. So it allows the accountant or you going back to the bank statements to make sure that, hey, I account for all the income and expenses.
Okay, and what if you want to pay with things with the credit card, but you have multiple properties? It seems like unfeasible to get a credit card for every single property.
Yeah, absolutely. So then that's when if you have if you have a portfolio with multiple properties, then you may need to consider using something like a QuickBooks system, an online accounting management system that allows you to do the bookkeeping and allocate your expenses accordingly.
And so would you recommend QuickBooks for certain investors for their real estate bookkeeping?
I personally use QuickBooks. It's just because I've been using it for so long. There are other options available, including like Xero, and then there is also, I think there's a couple other ones available. I know QuickBooks inside out just because I use them. Are they better than the other? I can't say because I've never used the other ones.
Sure, but is it overkill for a real estate investor? You know, maybe 2, 3, 4, 5, even 6 properties. Is it too much? Does it make things confusing to use QuickBooks?
It would not make it confusing.
Okay.
It actually helps to organize your receipts really easily, especially for people. We tend to generalize, oh, I have 5 properties. But the reality is some people have 5 properties with 5 different joint venture partner. And what it really means is that, hey, if you have 5 different joint venture partners, that means you have 5 different line of businesses. And having that QuickBooks to track the income and expenses and how the cash flow for you, it would help substantially.
Yeah, it really like legitimizes your rental property business as like a real business too, where you're tracking basically income statements, balance sheets for each property, right?
Yeah.
Okay. Any other tips or tricks to simplify bookkeeping or do it correctly?
Well, I think the biggest thing is understanding the general deductibility rule. People would come to me and ask questions like, can I deduct certain expenses? And the biggest thing is really like, hey, as long as you can establish the cause and effect relationship between incurring the expenses and earning the income, you should keep the receipt. Understand that and keep the receipt and pile up the receipt that you are not sure if you can deduct. Then at the end of the year, have the conversation with your accountant and go through that and maximize your deduction.
Okay. Here's an interesting one I have where I bought beer for my contractor. He was working hard at the house. It was in the summer. We went to LCBO. I mean, I had some beers, but so I brought some beers and I was like, can I really? I mean, at least half the beers were for the contractor. You know, I just grabbed like a 6-pack.
Yeah. I would deduct it because you did pay for the beer and the beer was for contractors. There's a personal element for it. That's why when it comes down to beer, LCBO or meals and grocery gift cards, they are only 50% deductible.
And it would look a bit fishy if there's thousands of dollars.
Yeah, exactly. For your rental, especially.
Yeah. Do you have any favorite tools other than QuickBooks for bookkeeping?
There are a few that I use personally. My favorite one of the favorite one is actually not a tool, is a separate email for rent collection and set up the auto deposit. I know that for people
for e-transfers.
For e-transfers. Yes.
Okay.
So you can have one address at Gmail. Not that I'm affiliated with Gmail, but you can have one address affiliated, at gmail.com created, and all the rent is being sent to that particular email address, and then it's getting deposited to the designated, dedicated bank account.
Okay. What about just one email address and all payments go there?
Well, then you would not be able to set up the indirect deposit you can, but it will only go into
one bank account.
One bank account.
Okay. Yeah, I have the separate email addresses set up, and then the other day I was like, why don't I just have this one main one?
You can.
I totally forgot about that though. You want it to go directly to that property's bank account.
But Gmail has this function. If you add a dot in anywhere, it would still go to the same Gmail account. It comes to the same mail account, but for indirect purpose, it will be different. So you can deposit it into different bank account for you.
Oh, okay. So if my email is anthonymolinaro@gmail.com and I put anthony.molinaro?
Yeah, or A Anthony.
Yeah.
Then it will be considered two different email address for indirect purpose, deposit purpose.
Oh,
but
okay.
it still, all the mail would still come into the same Gmail account.
Okay, because I like the idea of instead of checking all my bank accounts, I could log into one email address and see all the payments on the first of the month that have been deposited.
Yeah.
Okay, last question for you. When is it worth it to hire a bookkeeper for your rental property business?
When is it worth it?
Yeah.
It is really hard to say because
It's an individual question.
it is a very individualized question.
Yeah.
I've seen people having 20 properties and they're still doing it by themselves. And I've seen people having one property and they have a bookkeeper helping them. Like obviously, if you have a lot of joint ventures, that is the time that you should start focusing on hiring the right bookkeeper, because having the right bookkeeper or accountant would be able to help you, especially joint venture, the money coming in and out. It's very important to make sure that it's really clear with your business partner what you're doing.
Okay, and you have a simple bookkeeping template Excel spreadsheet that I think we're going to give people a link to.
Yep.
It's realestatetextips.ca/rockstar.
Yep.
Okay, so we'll put that in the video description. And then how does that work? People just manually enter into the categories you've already set up for properties?
Yep.
Okay, so all the categories are there. You just plug it in, which month it is, that type of stuff.
Yeah.
Okay, awesome. All right, thanks, Cherry.
Thank you.